All right, everyone, welcome back for another episode of Carnivore Trades. Today is Monday, January 10th, 2022. Holy cow, two more winners taken today as we take some shorts off of the table here. We had our QID position that was 2 times short the NASDAQ. We closed that near the lows of the day. We also had SSG, which was shorting the semiconductors, and we closed that near the lows of the day. Also picked up a couple of long positions here, and we are already comfortably in the money on those as well. So just crushing it here with Carnivore Trades to start the year off up 2.3% in just the first 6 days of trading. Absolutely phenomenal. I love this volatility. I love this market and the ability to be able to short near resistance and then double dip and just buy the support and get rewarded for that almost instantly. That's why I love swing trading and I love this market right now. This type of market where it's just a grind and a slog higher, that's, market's on easy mode, but the profits are really in the volatility, and that's what I crave as a swing trader. Anyways, let's take a look here. So market is getting a bounce. So the composite had this little support zone right here, drawn in, and then we have the 200 moving average. So gap down, little flush there. So that was an obvious bounce area. If you look on the triple Qs, you can see same kind of deal here, hitting this lower band, this lower trend line that we've been watching for quite some time. Didn't quite get to the 200 moving average, but let's be honest, that would have been a really, really big flush if it had gotten down there today. And did have a little bit of support kind of in this 370 range. You see this previous all-time high area. You did tag that. So market's getting a bid here. Let's take a look at the spiders. Got down to about 257, basically kissed that 100-day moving average. So that's your support there. Dow, which has been the strongest, which we've been telling you, it's going to be the strongest moving forward. Getting, having the least pullback here, obviously, and getting support at the 50 MA. Russell 2000 IWM here, fighting support at this yellow trend line here, and kind of near the lows of December. Or late December there on the Russell, but Russell getting a bid also. So why is the market bouncing here? It is because yields are pulling back. So you see the 10-year coming into a little bit of resistance here at the 200-week moving average. This is generally a minor, I know I've said that this is a minor resistance area at this point, and it is, but it doesn't mean that it can't at least offer some resistance, cause the market to, have to do a little bit of backing and filling here on yields. You see the TYX 30-year is into some resistance here at about the 2.15 handle there. And that is helping tech stocks. Take a look here. Tesla, big reversal. Look at some stocks, AMD, NVIDIA, Adobe. Look at the reversal on Adobe there, AFRM, Square, Microsoft, Google. Look at all these levels here getting hit and tagged. Cloud software via the IGV, nice reversal there. That's actually gone green now. So major levels getting hit here in tech, and that is obviously because yields are finally starting to cool off a little bit. In fairness, they've had such a powerful move off of the lows. It was about time that there was a little bit of some backing and filling being done. Let's talk about financials here. So XLF started off very strong, gapped higher and then reversed. So coming into a little bit of resistance here, and assuming yields continue to pull back, this should also cause financials to pull back. Makes a lot of sense there. Obviously, JP Morgan gapping up, now finishing negative, but it is not negative by too much here. But the important thing, though, is as we've noticed, the 10-year is outperforming the 30-year. So the yield curve is flattening, and this is going to hurt financials. It's going to hurt everything eventually. But as yields pull back a little bit, the market can get a bit of a bid. But it's important to note that yield curve flattening out is not a good thing. Broker dealers, a little bit softer here than the typical bank stocks here. Was never positive really today at all, down 0.5%, but it is kind of hanging in there. So we'll give it the benefit of the doubt for now. Dow Transport's rolling over. Remember when I said you could fade this bounce that it was going to get? That is rolling over now. It is holding support though in the meantime, but Dow Transports are rolling over a little bit here. Let's look at crude. So crude hitting resistance. Again, I said around 78.50, 79, that was going to be resistance. It's pulling back a little bit off of there. It's holding up okay, nothing really major. First major test is going to be right around the 75 handle. Got this kind of convergence of all the moving averages right here in that area. So, if you're aggressive, you could probably pick it up for a swing there. And obviously, crude is sort of following yields here. So if yields pull back, that's going to cause crude to pull back. Makes sense that crude would hit resistance there as yields are hitting resistance as well. XLE looks a lot like XLF. Just kind of a reversal day, gapped higher, and then now pulling back off the highs. You can see stocks like Chevron, Exxon, the main leaders here in the XLE pulling back as well. Nat gas getting a bit of a pop, although is starting to print kind of a hanging man here. It's possible the nat gas trades up into this 450 area, maybe hit that 50 MA. I still think nat gas has another dip in it, but it's holding up for now. And ultimately, this pattern here, again on the weekly, is just not a pattern of strength. It is a nice move, up 6% or so today, but this is not a pattern of strength. Now, if it can, close, on a weekly basis above, I would say probably 430 or so. I'd have to run some numbers on it. Then you could say, okay, now it's got to, it's probably put in some type of a short-term bottom here. But ultimately, it's just Monday. We'll continue to watch this. We'll see what happens here. But this is not really a pattern of strength unless we see follow through there on nat gas. All right, let's move on here. Dollar index, not a whole lot going on in the dollar. Yields did pull back, obviously, a little bit off the highs. So dollar, and dollar still is positive, but not like much. Ultimately, the dollar is just backing and filling. It's setting up to move higher, and you guys know the story on that. Expecting 98 to 99 there. I think you can get up to 99 pretty easily over the next couple of months. So that is coiling up to break out. Gold not really doing a whole lot. It is positive. Bond yields pulling back a little bit, so makes sense. Silver, same kind of deal. Platinum getting hit pretty hard here, but it is holding this green bar low. If it closes below this green bar low, though, that's a failed pattern, and platinum is going a lot lower. Palladium is a hot mess. Nothing to do with palladium right now. And copper pulling back a little bit here. Again, watch this green bar low. If it closes below that, it's going to test the lows again. But for right now, it's holding up okay. So we'll give it the benefit of the doubt here. Let's move on here. We'll look at Bitcoin. All right, so let's pull up Bitcoin. So Bitcoin dipped below 40,000, did get down to 39,672. So, it's holding up for now. It's trying to hang on to resistance. It's got to hold this area. Otherwise, it's straight down to about 35, 36. But for now, it's holding on. If it starts chopping sideways again, it's probably setting up to go lower, though. So be careful of that. But with the market getting a bit of a bid, it would make sense that Bitcoin can get a bid as well. Maybe it wants to go and retest this breakdown area around 45K. That would be a logical area of resistance for it, as obviously there's that trend line and there's your head and shoulder pattern. And obviously you're seeing the same thing on Ethereum. Ethereum getting below 3K. Oh, not below 3K, I think. Oh, no, there it did. Yeah, it got 29.26 was the low, but it is holding up for now. Obviously, this was your area of support. Nice chop there. Failed bear pattern. So that's usually going to be support. So nice bounce there for Ethereum. But same kind of deal here. I'd still expect crypto to go lower, and I still expect the market to go lower. But in the near term, doesn't mean it can't get a nice bounce here, as a lot of things were very oversold in the short term. Anyways, let's take a look back in at the spiders here. So yeah, down 0.5%, getting a nice bid here into the close, little pullback here. It can get through that 100 moving average if they juice it. We've got about 10 minutes left. And I don't know how much higher it gets right now, but I do expect the market to get a little bit of a relief rally, at least over the next week. And then we'll kind of reevaluate and see what happens from there. Anyways, guys, if you want to get in on the action, come join me at Patreon, Carnivore Trades, or carnivoretrades.com. I'm not posting trades there just yet, but I will be on February 1st when I move my Patreon service over there. Again, we're absolutely killing it right now. And this volatility, as long as this volatility continues, we're going to continue to make money. Anyways, guys, take care. Have a great rest of your day, and I will talk to you all tomorrow.